Good morning, everyone, and welcome to Meristem's Financial Independence webinar. I am Hepsa Ifnayobiora, and I'm your moderator for today. With me are three amazing panelists who will teach us the steps to becoming financially independent. I'll share their profile with you shortly. First, we have Mrs. Oladele, CFA. She's a financial securities trader turned financial educator. She has over 14 years of experience in securities trading, macroeconomic analysis, investment and treasury management, business development, business planning and strategy. She's currently the Senior Vice President, Global Markets at Patian Partners Limited, a fixed income brokerage firm in Nigeria. Riding on her extensive financial market experience, Mrs. Oladele is actively involved in bridging the pervasive personal finance, investing, and economic literacy gap amongst working professionals. She does this through her own YouTube channel and social media handles. She also founded the Money With Club, an investment community focused on helping professionals and entrepreneurs secure their financial future by providing consistent investment education and access to viable investment opportunities. Mrs. Oladele is the CFA charter holder and the pioneer chair of Gender Diversity Committee of the CFA Society in Nigeria, where she spearheaded the advocacy and implementation of initiatives for the advancement of women in financial services. Mrs. Oladele, we are happy to have you. Thank you for joining us. Okay, you're muted. Please unmute so that we can hear you.
Thank you for having me.
You're welcome, ma'am. Our second panelist is Mr. Collins Sagi Omokuro. He's the Special Assistant to the Honorable Minister for Industry, Trade and Investment. He manages a diverse portfolio of initiatives using corporate strategy and public policy framework to support the growth of medium, small, and micro enterprises, accelerate investment in the Nigerian economy, facilitating trade promotion, and establishing 21st century trade and free trade agreements. He has a BSc Agricultural Economics and Extension Services from the University of Benin and has taken business courses from Harvard Business School, London School of Finance and Business, and Lagos Business School. He's a certified associate member of the Chartered Institute of Securities and Investment UK, a chartered stockbroker, a certified management consultant, and a certified capital market operator. Prior to his current position, he has worked for Greenwich Merchant Bank as a regional business relationship manager and a business strategy executive. Outside of work, Mr. Collins enjoys mentoring youths, and he has also founded the Value Table, a monthly initiative that brings entrepreneurs, subject matter experts, and professionals together for insightful conversations that lead to outstanding collaborative projects. Thank you for joining us, Mr. Collins. We're happy to have you.
Thank you so much.
Our third panelist for today is Mr. Ademyi Adebisi. Mr. Adebisi is a wealth advisor with Meristem Wealth Management Limited. He provides individuals and businesses with guidance and expert advice in all areas of wealth management, including investment management, retirement planning, real estate, and estate planning. Beyond work, Mr. Adebisi enjoys speaking and helping people achieve financial independence. He holds a BSc Accounting from Bowen University and an MSc Investment Analysis from University of Stirling, UK. He's an affiliate of the Association of Chartered Certified Accountants. Thank you very much for joining us, Mr. Adebisi. We're happy to have you.
Thank you very much, Ifnaya.
All right, we'll proceed now with a presentation from Mr. Collins Omokuro.
Okay, let me share my slides. Can you see my slides?
Yes, clearly.
All right. So I thank you once again, everyone. Good morning, good afternoon to my co-panelists, Ola and Adeni, and of course to our great audience, clients, investors, ladies and gentlemen. First, I'd like to commend the management of Meristem for organizing this very important webinar and conversation. Essentially, the topical area is quite germane today because it literally speaks to things around sustainability and sustaining our wealth. And this is one thing that makes it so important for us to have this conversation today. I will just keep the content and then go straight to the intro for this discussion. And my presentation is basically, I was told I have 15 minutes, so I'll quickly just rush through my own thoughts of what financial independence as a tool for self-empowerment and what it means. For me, first off, it simply just says that self-sustaining financial and personal competitiveness to earn more. That's what it sums it for. But it has a whole lot that it presents. But my own presentation will focus on 3 key areas, driven from this simple definition again, a point where you are self-sustaining financially and personally competitive to earn more. And the question then is, how and by how? So one is by creating a sustaining wealth-based. 2 is by strengthening and prioritizing your circle of influence. 3 is by exploring opportunities to grow wealth. Thank God we have the wealth advisor here. Obviously, you'll be able to drill down on those key opportunities that are available within the institution, Meristem. I also believe that the thoughts that I, Ola, and Adeni will share during the panel session will provide broader understanding, broader insight that should spur further conversations and actions, particularly with the wealth advisor, again, that we have in the room. And the team, to further add to why it seems really important today, it's significantly looking at the paradigm shift that we have witnessed due to the global pandemic and all of the public health crises that we have seen. And that has shaped our lives comparing to the previous, to what we now call a new normal. And some facts have also shown that the learned, which are the people that I typically feel like we know it all, definitely will be destructed by the learned if we do not recognize these important strategies around building sustainable wealth that then make you self-sufficient, that then make you financial independent, that help you to grow and preserve your wealth over time. That's why I feel today's session is quite important. Permit me to cite a popular African quote, which is, every morning in Africa, a gazelle wakes up. It knows it must outrun the fastest lion or it will be killed. Every morning in Africa, a lion wakes up. It knows it must run faster than the slowest gazelle or it will starve. What it says is that it doesn't matter whether you are the lion or the gazelle. When the sun comes up, you did better be running. I particularly like the conclusion of this quote, because it doesn't matter whether you are a lion or a gazelle, whether you are a large corporate or an individual that is well established, or you're just starting off, you better be competitive. Whether you're an industry player, you can be disrupted by many events. Every day comes with its cash flow challenges. Financial independence is largely about cash flow management. Financial independence is simply a battle for the positive cash flows. So the question is, how fast are you running? Are you the lion, or are the lion already eating up or catching up with you? And when I mean catching up with you, certainly this can be depth of equity or depth or wealth. Okay, so that's, again, just gives us some of these thoughts around why this session today is quite important. There are some clear misconceptions and arguments around financial independence. You know, that this misconception sometimes creates that gap in people's ability to actually take action. So one of the popular ones is that you must be rich to be financially independent. This belief prevents people from starting their financial independent journey. Many financial independent people find out that they live modest financial life, which allows them to actually maximize their wealth over time. But a real part of financial independence is basically not having, it's not about having the lump sum stacked somewhere in your account. It is about the amount of income you consistently have. That cash flow, positive cash flow that come in monthly, quarterly, biannually, annually. And again, there is that side of the identity change that sometimes happen when you need to take that step. It is easy to say these things basically, but realistically, it requires that slow start towards making those extra savings or cutting back those extra expenses and making those huge changes at once. Sometimes, you know, like you can easily say these things, but making those huge changes sometimes can be very, very challenging. So we do not encourage you to take those very bold steps to cut off that. But you have to create that very conscious, sustainable wealth pattern, you know, that enable you to see this as a critical part of your personal or corporate competitiveness. Again, one other point that I think is important here is that the actual strategy here that is to focus on a single percentage of that better habits of trying to take actions to do the right thing, to be closer to that financial independence. You know, the best among these will be increasing your income and of course, investing those income. And again, that's why this session is so beautiful, because you have the advisors who will guide you on what sort of asset classes you should be looking at that are competitive today, that also help you preserve your wealth. And those conscious dedication to work that provide those income, thinking through them again, and then being disciplined to increase your investment when those incomes come. Those are other strategies that then help you build those wealth to become financial independent. The second argument is around you need to be retired to reach financial independence, and that you have to make huge sacrifices to also financially be independent. Personally, I believe you don't need to be retired to be financially independent. It can be achieved based on the standard that you set. Extreme frugality, giving up your free time to be financially independent, not really necessary. Because even just that simple, that little minor adjustments that you show when it comes to spending or how you earn income can be compounded quickly, you know, and that compounding quickly can be can make a significant difference. And when you are being disciplined, consistent, and persistent with these new habits of compounding, obviously you know that that becomes a bit faster than you can ever imagine. The last part of the misconception, sometimes it's around financial independence is reserved for those that have certain level of privileges. I think my own take here is always that money takes all emergencies and turns them to mere, sometimes errands, inconveniences. You know, it will help you go through some of those situations. Or you still find out that a lot of wealthy people are still not satisfied. They tell you they are still not independent. So it's about you, basically. There's a mindset shift that has to happen for you to be financially independent. I'll quickly move to one other key areas that help you drive that strength of achieving your financial independence. It's your circle of influence. Strengthening and prioritizing your circle of influence through mastering the act of the networking and act of relationship management. Connecting with people of like mind who are pursuing the same thing like you. Sometimes, and most times, can take you to another level very fast. They're saying that multiple heads are better than one. And sometimes we only, we think that we are only chasing these targets that we set for ourselves. But guess what? There are a bunch of other people that have similar goals, juggling on how to reach these goals of financial independence just as we are. But again, it's always very important to connect with people of like minds. And you find out that it's always fun when you are in that circle. When you can ask those burning questions, share ideas, opportunities, and even review topical issues that might even impact those collective goals. It might even concern that you require to exit a position that you've taken already. Typical example, which obviously I will not want to drill down on, is the Russia-Ukraine, how obviously it affected some key aspects of our economy. With a lot of people never knew that Nigeria was the highest importer of mackerel in the world until Russia and Ukraine. We are so dependent on some of this. So it's good that you understand these things and find out how opportunities obviously come. So when you sit with friends that share common interests, it helps also, as you are even reviewing issues that may threaten those rewards or strategy that you're building, you're also finding out opportunities that also help you guys take those quick positions. However, again, mindset counts a lot when we're dealing with things around this. Mindset has a lot to play. There must be that purposeful decision to build wealth. There must be that purposeful decision to build wealth. It is very, very important as an individual. which obviously then align with your investment statement or policy statement, guided by an advisor. Individuals, obviously, we need to make those deliberate push to sustain that consistency that you have decided to build, that I talked about earlier. And how you do this is you need to invest. And this requires that discipline, especially with the dwindling surpluses that we found in our economy. Of course, for these times, this should be investment that obviously should hedge against some of those exposures, FX, inflation, and devaluation. Our experts will be able to drill down on this. It is also important that we engage an advisor so that you are not saving and you are burning it out from the other end, or you are not saving, you are saving in an instrument or an asset class that macroeconomic issues or environment is eroding the return. It's also very important for us to, again, engage advisors who obviously will provide that expert guide on the ways to optimize your wealth. You know, optimize your wealth through giving you those preferable channels that then help you explore those various opportunities as well that are available to you based on those policy statements, your risk appetite. And this will obviously still help you diversify your portfolio of investments, you know, into asset classes that then protect against some of these issues that I highlighted earlier. And one last thing around that is the fact that we must be conscious to adjust our own standards if you want to financially independent. As much as you have a group of people coming together to help you share ideas and these experiences, guidance and opinion, you still need to get the habit of adjusting your standards. Sometimes how the rest of the world looks at the thing is different from someone who is in that part of financial independence. You almost need to sometimes see that mental adjustment when it comes to savings, spending, and investing. Traditionally, it's sometimes expected that you set aside 10 to 20% of your income for investing. But again, those are for some people that want to retire at 65. But for obvious reasons, that's obviously sometimes doesn't really work for someone who wants to achieve financial independence very early. Someone that wants to probably do something else before age 65. Someone that wants to maybe quit his or her job and do something else. And one thing that is very sure with attitude or character or discipline around such is that you just become an outlier from the crowd. And the typical standard rules sometimes don't apply to you anymore. And you find people doing averagely between 40, 50%, 30, 40, 50% after tax income for investing savings. Then transitioning beyond after making some of these decisions to make those savings. So the opportunity is now where you sustain the growth. That is when you have achieved, gotten to that destination, when your money can then begin to work for you. So that transition help you to now build the wealth, those extra or additional luxury that you choose to enjoy. You switch focus to making more from what you have saved against saving more. You know, because you don't need to, at this point, you don't need to focus a lot more on saving and then forget the real deal of investing those savings. At this point, you're investing in the right asset class. You're sitting down with the portfolio manager. You're sitting down with your wealth manager. And one other very important point here is that when you do not recognize the point to start investing your quality, when you don't recognize the point where you begin to grow this wealth that you have saved, when your wealth begin to take care of the typical life expense, you realize that some part of your life, the quality starts to decline in certain areas because you begin to start pitching pennies, you start going beyond the rule of that part of creating financial independence. Again, the secret here is how you manage your personal cash flow. How you manage your personal cash flow as an employee, as a business owner. It's about what incomes are coming and how fast it goes out of your business. You don't want to become a tap that only just bleed expenses. Even when you want to invest in assets, those assets should be assets for real. People buy houses, but you don't buy houses and just stack it there. You are paying mortgages, you are renovating, you are paying bills. But I mean, you can buy houses when obviously buy a place where you live, but you invest in assets where you get rental income from them. You don't lock in a valuable capital in an asset that you typically cannot convert to assets almost immediately when you need to. And even if you need to leave it for a certain number of years, it must be able to cover for those exposures that I've mentioned. I wouldn't want to drill so much on the traditional investments, traditional asset classes. I'll just touch a bit about what I call an alternative portfolio. Taking equity value positions, commodity aggregations, processing of value addition and commodity exports. Today, I'll pick some few examples today from where I work. I'm based on the little experience I also have here. We've seen that while we are chasing a lot of the returns on the traditional asset class, it is also very important for us to learn to diversify. Diversification is so important when you're trying to build wealth and when you're trying to live a financial independent life. I'll give a simple example. Nigeria today spent over $600 million importing cassava starch and ethanol our current import bill, obviously we are unarguably the highest producer of cassava in the world. But clearly, we haven't done a lot around value addition. So the basic value addition is on just consuming it as gari, fufu, chips. But the major export earning strength of cassava is the starch and ethanol components. Oil palm. Nigeria spent over $500 million annually importing oil palm oil, not oil palm oil. And this is something that we have the right ecology, we have the right land, and we have the labor to develop. We have few players trying to do a whole lot in that space. But guess what? We haven't scratched it. I'm just highlighting the opportunity. So if you look at sesame seed, these are commodities, these are things that are grown in Nigeria today. So I was talking about just exports. If you are talking about just simple aggregation now, you decide to go into aggregation today. In January 2022, a 50 kg bag of ginger was sold for 14,000 naira or 15,000 naira a bag. As at April this same year, that same bag of ginger was sold for 38,000 naira. The same country, soya bean was sold at 35,000 naira. This was around January 15th. Ginger was around January 10th, January 8th. I'm speaking facts. Soya bean was sold at 35,000 naira a bag. And soya bean is currently, soya bean actually rose to over 60,000 naira a bag this same year. Same with garlic, same with beans. Beans obviously can even go as high as 300%, 400%. And this is year on year. It happens not just because it's this year, because it's a cycle. If you're looking at soya bean alone, Nigeria, we only will produce less than 30% of our local demand. And the major export commodity for soya bean is the milk and the oil. So a simple drilling down into value addition. And again, from an investment perspective, you don't really need to participate in this directly. You can go through your institution to look at companies that are playing within this space that need some, maybe just simple working capital financing. There are lots of them. There are lots of them. And I would like to, I know I had 15 minutes, so I'd like to just end by saying that success is dependent on the actions and steps we take to achieve it. And I'd like to say, I mean, like, show me that man who doesn't have an investment, and I will tell you how soon that person will go broke. Investment really is about building a safe haven for the future. future is here, but there's a lot of future ahead of people around us. And with the right choice of investments, of course, with the controlled or minimum risk, and with expert guidance, it's obviously profits is, will I say guaranteed? Am I permitted to say guaranteed? Thank you so much. Thank you so much.
Thank you very much, Mr. Collins, for that fantastic presentation. It is insightful to know that regardless of the high inflation in Nigeria, there are still opportunities for investors in agriculture to not only earn as much as 300% to 400% increase, as in the case of producing beans, or simply storing and selling when it is scarce, but also through exports. Fantastic presentation. We like the quote that says that the African quote, in a brief summary, it doesn't matter whether we are lions or gazelles. Once the sun comes up, we had better be running. Thank you very much. We appreciate the deep insights you've given to us today. At this point, you're welcome. At this point, we'll go into the panel discussion. For our attendees, please type your questions in the Q&A chat box. Our panelists will answer your questions. Okay, the first question goes to Mr. Collins. Talking about financial independence, is it truly possible to attain financial independence, not just being rich, but attaining the status of having enough income or wealth sufficient to pay one's living expenses for the rest of one's life without having to be employed or dependent on others?
Okay, thank you so much. I think I like that question a lot, because if I'm speaking to, I can assume that I'm speaking to my father, who probably so I'm using this hypothetically, speaking to a father that has worked, say, 35 years in the public service. And by structure, by decision, he decided to go the way of prudency, discipline, and is saving a certain amount year on year. And with experience, I also did something like that while I was in, I think, Port Harcourt or Ekiti. So what I did then was, there were palm sects that we found out after five years of retirement, they are literally, let me not use the word that, they're literally looking for how to even pay the smallest bill that they used to dash out to their driver. And then what we did was to create some form of a retirement structure where you put in a certain amount month to month. And for those that did at that point, what we did was to invest it. So again, it is good if you can achieve it, and you can also not achieve it based on the macroeconomic environment. Obviously, if you have done discipline, you looked at your income and your expenses. We call it, in my friend's table, we call it, there's something I call the value table. In value table, we call it your recurrent and your current expenses. So when you take that in and you are able to then have some level of little savings, and you consistently have done your math to say at 35 years of saving or 20 years, I should be able to have $1 million or two. But based on the environment, you need not only just take that decision on your own, you need to sit with a financial advisor who then help you structure a portfolio that protects you against all these exposures. I mean, as of 2013, we're seeing dollar to naira was at less than 200, all right? It was at 2020, I made a payment at 380. So today that's 605. So even if you had an X amount in naira savings, you have lost a significant portion of that value. So if your father has saved 35 years to get 30 million naira, that would have made sense if Naira was still as good as 30 million Naira when he started, obviously is out of that table now, because that 30 million Naira is no longer 30 million Naira worth. But if he had it with a portfolio manager that say, let's put it in Eurobond, let's look at a dollar fund, for example, or a real estate investment that average above inflation and all of that, hedge against all of this exposure, you are still as good as having. So it is possible. Thank you. I hope I answered your question. I didn't just go around.
Thank you very much, Mr. Collins. Yes, you answered the question. It is very much possible. The next question will go to Mrs. Oladele. If it is truly possible, why then does it still elude many people, including working professionals and educated people all over the world?
Thank you once again for having me, and thank you to everyone that is joining and listening in. Why is it elusive? The reality of it is that a lot of people do not really know that they should do something, but don't know exactly what they should be doing, and don't even understand the environment. So taking a cue from Mr. Collins and his example about currency devaluation, right? Everybody knows that the currency consistently devalues, but not everybody knows what they should be doing to prevent themselves, or what investment assets they should be putting their money in to actually hedge themselves from currency devaluation. So there's a part where people don't have a knowledge of the markets. There's another part where people do not have an understanding of themselves. When I say understanding of themselves, you just hear about an investment. They say is going to double your money, but they say it's going to double your money in 5 years, but you need the money in 3 years' time. And then your friend, everybody's doing it, so you jump in along with them. 3 years down the line, you are broke. And then you have to sell at a bad level. So did you make a loss? Yes. Was the investment viable? Yes. But was it fit for you? No. So those are kind of conversations that people need to have before they actually start investing. But if it's about it being elusive, the major issues are: one, lack of education about the environment, lack of education about the investment opportunities and if they are suitable for you. And then two, lack of information. People do not know where to find the investments that suit them. I saw someone in the Q&A saying that we need to know exactly that the returns, that the institutions provide low returns. My question is, what assets are you investing in there? Not every asset has the same return. Even yes. Institutions have different assets, right? So that they advertise one and they say it's low risk, right? That's not all they do. And if that's all they do there, then there's another institution that will provide the service that you need. But the first thing is, okay, this is where I am. What do I need? Then you can now look for who provides that service. But given a blanket of institutions offer low returns, it's actually not informed. It actually tells me that there needs to be more education. And this is where this kind of sessions come in, because there's no blanket. You can't tell me that real estate is giving the same return as a bond or a commercial paper. And there's a reason why a commercial paper is that low. Also remembering that the higher the risk, the higher the return. So when you are trying to beat inflation, there's also risk that you are taking. And what does risk mean in simple English? You can lose your money. The higher risk means there's a higher chance that you will lose money. So those are the kind of things. Education is a major gap. And just to add some statistics, right? I was reading some data from FINRA, and it says that only 30% of global world population actually understand financial education. And actually, financial education is a predictor of your future, is a better predictor of your future wealth than how much you earn. Meaning that even if you earn well and you are not financially educated, we are not sure that you're guaranteed to be financially independent after retirement. I hope that answers your question, Ifunaya.
Yes, Mrs. Oladele, thank you very much. The key statement you made with regards to the question asked by one of our attendees is financial education, literacy, knowing enough. Because as we speak, in the Eurobond market, there is a yield of currently between 18 to even 20% right now. And if investors, if investors are savvy enough, they would have that. Talking about these investment options, my next question would be for Mr. Adeniyi. Talking about returns on investment and the fact that the client wants something that beats inflation, what advice would you offer at this time with regards to Eurobonds or other investment options that may beat inflation? Thank you.
Thank you very much, Ifunaya. So I'll just pick it on, from where Ola stopped. You just know what's good for you at this point in time. I know that we can start this session talking about dollars from beginning to the end, because everyone believes that it protects them from either currency devaluation or protect the value of their currency, or would help them edge inflation at this point. But it's also very critical to know what your tenor is, or how long are you investing for. You mentioned that we have returns on Eurobond at 16 to 20%. The question is, these bonds are long term. They are bonds that 5 years, 10 years, 20 years. And for some people, they are, the investment duration is about 1 year. So for 1 year, what do you do differently? For people who have, the duration is 2 years, what do you do? So it really depends on how long you're willing to put your money away for. And at the very short end of things, yes, there are deposit investment you can do. There are mutual funds you can invest in. And if you long term, obviously you can then look at the Eurobonds as an option to invest in. So it really depends on where you are and what the objectives are that you want to achieve. So when you're able to identify your objective, it makes it easier for advisors like us to even advise you to say, what, if you're short term, these are options available. You want to consider a deposit investment between 6 to 1 year. What liability do you have for someone who is expecting to pay bills in euros? For example, what should you be looking to invest? What investment options should you be considering? And for someone who has naira obligation in the next 1 year, so before we get to the point of the currency itself, we need to address the issue of the goal or the objective of the investment, and then from there we can then now decide which options. But in terms of dollar options, there are short-term options and there are long-term options, which would also depend on your ability, to also invest. For you talk about Eurobonds also, the minimum is not as low as it is for a mutual fund investment, right? So the minimum size to invest in Eurobonds is $200,000 if you're investing the minimum size, right? And then for other options, you can maybe do as low as $2,000. So it also will depend. The amount of money that you have available for investment will also matter in deciding which option to go for. But in all, I think to address your question, yes, there are Eurobond options, there are deposit options, there are mutual fund options.
Fantastic answer, Adeniyi. Thank you very much. So to our attendees who are asking what options to beat inflation, the answers have just been given. Moving further, it is a common belief that, talking about Naira and dollars, that devaluation of the Naira is a major factor that sabotages financial independence. So you have someone who has built so much in Naira, but now they can no longer compete on a global scale. With regards to that, Mrs. Oladele, what advice will you offer to investors?
So yes, when you are saving, if you are saving and you're leaving money idle in the bank, then devaluation is a major challenge, and leaving money idle in the bank is better for you to leave it idle in dollars than to leave it idle in Naira. But that being said, America is reporting inflation levels of 9%. What that means is that even that dollar that you think you are leaving it idle in, you are still losing value, because the actual impact of the value or the loss of your value is inflation. So yes, dollar, having it in dollar will save you, would hedge you from the Nigerian problem, but globally there's inflation, so you are still not hedged. Your value is reducing every day. Now, that being said, I will use a clear-cut scenario. In 2020, the currency probably moved from like 360, maybe hit 500. I'm not too sure of the exact numbers, right? But if you had bought a stock in Nigeria, Naira, and you bought it in somewhere between March, April, May, June of 2020, you would have doubled and almost tripled your returns by now for some stocks, if your stock selection was good.
Yeah.
So to put it in context, there's a stock that was 90 naira. Right now it's over 200. I'm sure the investment advisor here will know the. I didn't want to call him. I wasn't sure of the policy around calling names, right? But 90 to over 200, right? What am I saying? That yes, we say nothing is happening, nothing is happening, nothing is happening. The reality is that things are happening. It is a lack of knowledge, lack of information, lack of education that is the problem. Even year to date, the global markets of the world, stock markets of the world have been in a red. But there are some stocks in Nigeria that started at 100 and something. They're already at 200. That same stock started at 100 and something, and it's already at 200. What am I saying? Yes, it is important to hedge against a devaluation. But if, for example, the currency moves from 500 to 550, that is a 10% devaluation. Think about that's 50 over 500, that's 10%. Anything that is giving you more than 10% return has beat the devaluation, even if you left your investment in Naira. And I put it to you that it is somewhat easier to get 12%, 15% return in Nigeria than it is to get abroad. The things you would do to take, because I mean, some corporate bonds of good names are probably offering around those levels. By doing that, you have already beat that devaluation, if you get that clear. Now, people say, okay, inflation is 16%. I agree. I would say two things about that. First thing is, the higher the return, the higher the risk. Meaning that if you want to go chasing inflation, you would enter into very high risk, a high risk portfolio. Remembering the conversations like Adeni said about, okay, are you sure you can actually put your money for this long, blah, blah, blah. You have to consider those things. There's no point in investing and going to hang. It's actually better for you to leave your capital and let inflation eat it than for you to actually lose the capital from a bad investment. So it's obviously not a one-time, it's not a, like this conversation cannot end here. I'm sure as people are listening, I'm wondering, okay, I've heard this, and you've carried my head to the other direction, and you're taking my head to the other direction. Which one do I do? It is in phases. You can't wake up one day and know everything. But I can tell you that there are investment opportunities in Nigeria that if you focus, understand, latch onto, and you are consistent, you would actually beat devaluation in the country.
Fantastic answer, Mrs. Oladile. The fact that if you have the right information and you're consistent, your returns will still beat inflation here in Nigeria. That is a wonderful answer. Thank you very much. And talking about options, we do not want to leave our attendees with only investment options, but also business options. Mr. Collins mentioned certain agricultural produce that you could buy or perhaps harvest if you are a farmer. And by the way, we have attendees, clients, and prospects who are farmers with us today. Okay, so Mr. Collins, what business advice will you give to an investor who wants to attain financial independence through business?
I think we have stressed that during my presentation. I think all the panelists have also mentioned that significantly. Consistency, persistence is quite important, and having the right information is very key. So when I was talking about agricultural commodities, and I like to clear this, it is not a syndicated agricultural commodities sales. You have to see where and have it. It's not that whole structure of people saying that we are helping you. No. There are warehouses that people make these purchases and store them, and you watch the market price move and sell. There are a whole lot of other games around that whole structure, which obviously I will not want to go into. So that is not what I'm talking about. So these numbers that I mentioned earlier, I have done it. I am still doing it. So it's not like, so I can also give my guide after this. If you want to share my contact, I could do that easily. So that nobody is guided on the other direction, which is obviously has led a lot of people to lose money. So that's just sort of adding that to it. Thank you so much.
All right, thank you very much, Mr. Collins. Of course, we'd like to have your contact so that we know how to gain 200 to 400% increase in the capital we've used to purchase some goods that you have advised us to go for. All right, so moving further now to policies, talking about information, right? There are policies of CBN that actually help investors or reward them for their efforts. Specifically talking about the RT200 program of CBN. It is a popular belief that it is to help investors or common Nigerians, first of all, to earn extra money through their exports. And since we have farmers here, Mr. Collins, would you please share some more information on the RT200 program for farmers or Nigerians who have goods to export? Thank you.
All right, thank you so much for that. Again, I'm quite passionate about this, and I feel that the direction of where we need to go as an economy, non-oil is certainly a direction that will favor everybody beyond even the RT200, the Africa Continental Free Trade Agreement that we signed that took off. Though trading is yet to commence, trading is supposed to commence next month. But of course, there are still a whole lot of issues that are negotiations still going on some key aspects of the rules of origin across other African countries. And of course, other schedule of services that are yet to be submitted by other countries in Africa. But coming back to the RT200, it's essentially a policy for focus to motivate non-oil exports. There are two aspects of that when it comes to the motivation or incentives. There's the non-oil exports repatriation rebate scheme, which is proceed repatriation rebate scheme, which basically give incentive to exporters in that sector who repatriate and sell export proceeds in the official FX market. And under that scheme, each exporter obviously is paid 65 Naira for every dollar that you repatriate. I think the second aspect of that is the I&E window, which for authorized dealer bank who then sell to third party. So exporters are paid 35 Naira for every dollar that is repatriated, that is sold within that window. I think essentially those are the two windows, but again, there is a clear line of no more than 10 kobo spread from the I&E window aspect of what I just explained. I think CBN actually recently paid about 3.5 billion to about 150 exporters, which as rebates for those guys that have taken on that strategy and are driving in. And a lot of commercial banks as well are already doing serious sensitizations across the nation, because what that also means that by the policy obviously then means that there is FX exit from CBN to commercial banks. So there's a lot of opportunity to support exporters who have the right capacity and volume. Can you hear me?
Yes, we lost you for a moment, but we can hear you now.
Okay, I said commercial banks are also open to support exporters because they need exporters at this point, particularly those exporters that have the right volume, capacity, that already have those sort of exporters are the ones that will definitely benefit not only from the banks, and can also benefit from the Nigeria Export Promotion Council as well. Thank you so much.
Thank you very much, Mr. Collins, for that detailed answer. It is important to know for our attendees that you could attain financial independence through business, through investment strategies, a combination of both, and even many more options that we'll be sharing with you today. Talking about strategies, Mrs. Oladele, what is the best strategy for attaining financial independence?
Okay, with respect to financial independence, financial independence is about personal finance, and it's important to first of all highlight that personal finance is personal. What that means is that what you would need to be financially independent in Lagos is different from what you need to be financially independent, say, in the UK or in Ibadan or in you get, every location has their financial requirements. Some places are more expensive than others. Now, why am I saying that? You have to set your goals based on where you are going. If, for example, you plan to retire and go back to your village, it's different from if you plan to retire to Switzerland, right? And so you can't be acting like someone who's planning to retire to go to his village that already has a family house there when your goal is to go to Switzerland. Obviously, if your goal is to go to Switzerland, then you'll be planning along the lines of what investment opportunities would I have or get or invest in that will fund me in whatever currency that they use there, right? Or at least at the minimum in USD, so I can convert. That's the first thing. So when it comes to financial independence, before you even start taking any action, the first question is, where are you going? Before you get on the road, you plot the destination on Google Maps, and it's now start telling you, turn left, turn right, blah, blah, blah. It's the same thing with financial independence. So set your own definition for financial independence. That is your goal. And then begin to work back. Now, in that working back process, there's a lot of education. There's a lot of staying in the right environment to get information, because education might be, this is what a bond is, this is what venture capital is, this is what equity is, this is what this is, right? Education might also be understanding the environment, economic environment. This is a policy that affects me. I should be tracking oil. If oil is going up, there's a problem because fuel costs will soon go up, things like that. There's that education part, but there's also information that, there's this opportunity. Like we come on this call now, we've heard that we can export. We heard that central bank will pay us back a certain amount if we export. It's information for someone who might already be in agric, but does not know that that opportunity is there, right? So there's that information. And then there's also taking action, right? You can go for all these sessions, right? But if they tell you invest, and you are sitting and saying, what is the point? It's just 10%. Inflation is at 16, so I won't do anything. Guess what? At doing nothing, you are at zero, right? So you have to keep moving. I always tell people that investing is a journey, right? You can't know everything before you start, but you have to be committed to learning, right? You can't, even me, I've been in finance for 14, 15 years. I've done CFA, I've read the books, blah, blah, blah. But I still call people, I still hear some news, and I call some people who are maybe in that space. That's their everyday thing that they are eating and sleeping and thinking about. And I'm like, okay, what does this mean? So I can now break down their knowledge and apply to my investment. So there's nobody that knows everything. I'm sure even Warren Buffett has his guys that he talks to, not because he doesn't have a view, but because no human being is an island. I'm sure he still reads books, things like that, right? So when you're talking about financial independence, understand that it's a journey. It's a journey that when you even get to the point where you choose to retire, you would have investments that will mature. You still have to know what to do with them. Do you understand? So even investing doesn't end, even when you get to that point where, okay, I just get $100,000 back into my account. Because you've learned to invest, you know that $100,000 or $1 million is not going to go and sit down because inflation is still doing its work. You will still need to be in the flow to know what to invest in. So that culture of learning and growing is the most important thing. But beyond it, if your head becomes big and massive with knowledge, but you don't take action, right? You don't even take the baby steps, right? You don't even try to understand the why. Some people genuinely feel that stock market is a gamble, right? And they don't realize that people went to school. And I always say, why would people go to school to study how to gamble? Like, why invest that much? Just go and gamble, right? So things like that, these are things that you need to be aware of. If you take financial independence as a goal, your own definition of financial independence will be different from mine. That's the first thing. So define your own. You know, when they say SMART goals, written, you know, those specific, measurable, blah, blah, blah. SMART goals, set them as goals, measurable stuff that you can know when you've achieved, right? And then start working back. It takes some dedication, which is why not everybody achieves it. Because in the end, you have a good salary, you want to go on vacation, somebody's in 40th, you're traveling for it, blah, blah, blah. Those things will come. And how to say no all the time or to say no when you need to will be a problem. And it's the people that know when to say no and say it that actually achieve it. So all this talk is supposed to bring you to the point where you actually start taking action, actually start asking questions, because you won't know everything. But understanding what you don't know and knowing how to ask for it is also part of it. I hope I answered your question.
Very well. Answered with very well. Thank you very much, Mrs. Oladele. And the fact that it's not just about gaining the knowledge as we're doing now, but putting it into action, that is key, because financial independence is a journey, and then it begins by implementing what you have learned. Okay, for our attendees, please check the chat box. I can see some of us asking for Mrs. Oladele's handle and Mr. Collins' number. You can get some of that by simply reaching out to us. And to enable us to contact you, please complete the Google form in the chat box. We have put the link in there. Please ensure, okay, Mrs. Oladele has shared her Instagram handle and her LinkedIn. Mr. Collins and Adeni, please feel free to share yours too on our chat box so that our attendees can reach out to you directly for your amazing financial advice. Then remember, attendees, please complete the Google form to enable our wealth advisors reach out to you to further plan your financial independence. Okay, for attendees who want to ask their questions verbally, please raise your hand. We will call upon you to ask your questions verbally. There is a question from Mr. Ike Ikwago. I think this question would go to Adeni. Mr. Ike is asking, do you advise investment with some cooperatives into palm oil value chain, or can one buy stocks of few established companies dealing mainly on palm oil? Mr. Adeni.
Thank you very much. So the two sides to it. Yes, you can buy stocks of companies that did that deal, all palm. I think about 2 or 3 of them available on Nigeria Stock Exchange or NGX as it's called nowadays. So you can do that. But then before you go ahead with that, it'd be nice for you to seek more knowledge about the companies, their performance, and their future prospect before doing that. In terms of the cooperative, I do not have enough information to guide you on that. But what I can tell you is that it's always good to invest through a vehicle that is, that's regulated. Very, very important. Whether regulation by CBN or by SEC, the SEC, but it's important that you go through one of those vehicles, whether you come through firms like ours, Meristem, or any other firm that's registered by, with this organization, so that there's protection of your rights somewhere in the background there. Because what you see there's a lot of noise right now in the environment, with tech and all that comes with it, and all the vehicles that come and advertise fantastic stuff and get 100%, 50, 6 months, 1 year. I know that all of that is available right now, but it's very important that you do your due diligence. And what will save you from that due diligence is investing with firms that are regulated like ours. That's very, very key. But if you want to buy the stock of these companies, we provide weekly guidance on stocks listed on the stock exchange. And that information can be available to you if you fill the form. And I'm sure someone will reach out to you to discuss that further. Thank you, Funaya.
Thank you very much, Adeni. Talking about investment options, please, can you throw more light on Meristem products and services that an investor can use to attain financial independence? Thank you.
Okay, so I think I'll keep behind or like here again, Funaya, where she said that what's good for me is not good for you. So if I say you should buy a mutual fund, or I say you should buy dollar-based investment, or say buy equities, that would be very unfair. For some people, this is earning season, dividends just dropping here and there in their account because they have invested, a year ago. But what I would say to this is that I think that what's critical is that people should, learn to speak to other people that know better than them, whether people who are in the profession like us, or people who that at least who they see within the circle of influence, like Collins also mentioned, that know better or have experience investing. Yes, there are options. You can buy mutual funds. You can invest in stock. You can, invest in dollar-based investment. You can invest in real estate. You can invest in commodities, as I mentioned earlier. But it's critical that you engage, because I don't know where you are in life. If I say invest in dollar-based investment and you put your money in today and then you have to pay school fees tomorrow morning, that means you still have to sell and convert and then pay the bills, right? It doesn't mean that. So it's a function of where you are in life. Critically, also, the age is a key factor here, and your earning power also very important. Is also very important. Yes, but when you're starting off, if I can address that, when you're starting off, the key thing when you're starting off is to put the money away and put money in investment vehicles that are safe and that can compound over time. Then mutual fund is perfect. And I think most time we have two mutual funds. We have an equity market fund and have a money market fund. Even for those two funds, the goals differ. One is risky, one is not. So if I say, invest in mutual funds, I also have to be clear in terms of the terms of those funds and what they can help you achieve as a person. So to just, yes, there are options. As I said, there are options in mutual funds, there are options in fixed investments, there are options in shares that you can invest there also. But please reach out to us, so that we can at least provide some level of guidance, profile you, know where your risk appetite is, and then also guide you through that whole process entirely, because it helps. And we have experience dealing with a lot of clients, for example, and in that dealing, we've gathered a lot of experience. We know what the pitfall is. So at least we have a reasonable amount of experience in terms of what has happened and what's going to happen. And also in terms of research, we're very, very heavy, on research, and also help us that way we have a very futuristic view of certain things, at least, and that also can help in minimizing, any unforeseen issues that you may, see, come about in future. So please, it's very critical that you engage. As everyone on this call has said today, and then consistency is very important. If they're going to put money away, put it away over time. I know that people are always quick to, and what is the return? And you say, oh, it's 6%. And they're saying, no, that's too small. Really? Treasury bills, 1 year treasury bills today is about 6%, right? And so on, it's almost 20%. Obviously it's far away. So if you want 20, that means you want to take risk. And when you want to take risk, you must be willing to lose your money. So all of those things are tied together, and it's very important that you seek guidance before going ahead. But there are options, definitely, I can tell you that. Thank you, Funaya.
Thank you very much, Adeniyi. Speaking about these options, Victor Emejiro is asking in the chat box, can you explain a little on margin trading for an investor who wants to explore that option? Margin trading.
Okay, thank you. So margin is basically, you adding leverage to your equity portfolio. If you understand how it works, you already have an existing portfolio of equities that you've invested in, but you want to do more. So you technically want to use that portfolio as a collateral and quote to get more cash to invest. And then so that existing portfolio you have becomes a collateral, and then you get extra money that you can then also invest in the market over time again. So, and those funds are not free, they come at a cost. And in some cases, it may be the collateral may be 1 for 1, and it may be less than that, depending on what your portfolio is looking like at that point in time. But yes, that option is available, and then you can drop your email in the chat box, so someone reach out to you immediately to take it further from here. But yes, it's available. It's something that we do, and we are very happy to help you achieve that objective if it's something you're open to at the moment.
All right, thank you very much, Adeniyi. The next question from Mr. Andrew Iyaji, who would go to Mrs. Oladile. Mr. Andrew is asking, I am a moderate to high risk investor. What would you say about equities in Nigeria and the US? What sectors would you advise for investment?
I will write on Adeniyi's back and say, this question is specific to you. And I think people don't really understand the depth of that statement, that it is specific to you. So to put it into context, right? Netflix is a popular company, right? But Netflix has been struggling between a loss and profit. So they just entered a loss maybe like a year or so ago, and then they are struggling right now. However, Netflix shares has been growing through the years. Why? Because they've been expanding to markets, so people see opportunity, blah, 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 blah. Now, if you are someone who doesn't have long staying power, the reality is that Netflix is high risk because they're not even in stable region. But a Bank of America might be boring, but they probably will pay their dividends when it's due. I'm not sure if they pay, don't quote me on that. But what am I trying to say? They're a mature company. We know how much they will print every year. We know, there's some stability about them. Now, so when you say moderate to high risk, I'm not even sure what your definition of moderate to high risk is, because I'm not sure that if I tell you that buy this stock today and it's high risk, so it means that if you put $100 in 2 months' time, it can go to $20. If your heart is okay, then you are a high risk investor. But if your heart cannot handle it, then you may not be a high risk investor. You might just be someone who is young and has energy and has excitement, until when you see that loss, then you know what it means to work hard, gather money for 5 years and see it drop by 80%. So those kind of assessments are not things that you make before you lose money. When you've lost money and you've gone through the emotions of losing money, then you can say, if after losing money, you still have the guts to go back for those same kind of investments, then you are really a high risk investor. If the loss of money throws you off, like you can't eat, you can't call anybody, you can't think clearly, then you are not a high risk investor, right? So if it's about sectors, there are various sectors, because if we talk about sectors, every sector has potential. Oil prices are doing well, right? Everybody will buy phones, everybody will eat, everybody would go out, move around, right? Everybody would use technology. But which companies in those sectors have the right strategy? So you can say sector, but after I tell you sector, we have to drill down again to the companies. And then there are companies that have said I'm buying, and then it appears after a while that this strategy that they put on paper that made me buy, they're not really aligning with it based on the numbers. So I would change my mind. So if you don't understand what made me say buy this company, then you will not understand when the cheese has moved, so I shouldn't be putting more money in this company. I should be trying to sell. All this I have said has just told you in simple English that this is not a one-liner answer. And I think most people keep asking these questions because they want something they can just take and do. But is your money, is your wealth? If I tell you like that, I might not be doing you a good thing, because I might change my mind halfway through and I've forgotten I've told you. And that's the reality. So sometimes you sort of need to subscribe to things. Meristem, about Nigerian stocks, Meristem sends out research every week, for example. So if you open a stockbroking account with them, you will see when they have buy order. You will see when they have sell order. They will send you news about these companies. So you yourself, when they sent you the first news that said buy, they told you this is why they are saying buy. If you see on channels or on CNN that some of the things that they said buy for has changed, you will go back, even though you don't read the newsletter every day, you'll go back and check that weekend to say, what is the update? That is where these things come up. And so you need to calm down and understand that you're not just buying one stock today. The idea is that every month, when you get your salary, even if it's just 20K or 50K or whatever it is that you can afford, you are using it to buy these things. So it's not a one-time event. And if the conversation needs to change, you are focused on it enough to see when the cheese has moved, because the cheese does move, because they are real companies and they can hire a bad CEO. The CEO can resign, things happen, or economic policies can change or something. But you need to understand that this is not the right place to get that answer. When they say you need to sit down with someone or you need to be in an environment, it is not because they are trying to sell to you. It's because if you stand alone, you are most likely to lose money.
Thank you very much, Mrs. Oladile. Mr. Andrew, we hope that you have an account with Meristem, and if you do not, please complete the form. would reach out to you, and you would have a financial advisor or wealth advisor dedicated to you specifically to help you explore further what your options are, given your risk appetite. That is actually what we do at Meristem. Please feel free to reach out to us. We'll answer your questions for that. We'll sit down with you, have a one-on-one consultation, and then provide you with the best investment advice. Thank you very much, Mrs. Aladele, for going deep and explaining that it is not a one-size-fits-all for every investor. It is not. All right. So the next question from Festus. Festus is now retired, but with funds in TB-related products. Inflation has bastardized the income from the product. Where else can I look? Okay, this question might go to Adeni at this time. He says that he's retired, but the inflation has bastardized his income from TB-related products. So where else can he go?
Yeah, so the options are very limited. If you want to consider some, dollar investments, yes, I know that the exchange rate is high, but that may be an option, to look into at the moment to see if you can allocate some of those, funds into dollar-based investments, and that can at least help, stabilize, the cash flow over time. So that should be very helpful.
Another thing, can I add something here?
Yeah, sure.
Sure, please.
So there's a concern with when you're retired, is a different ball game. Risk is, we have to be as careful as possible. However, there are some companies on the Nigerian Stock Exchange that pay dividend consistently. So it's almost like you are almost sure, like you are sure that these companies would pay dividend. So if, for example, the price of the stock is 20 naira and they pay 2 naira 50 kobo dividend, it means that at the end of a 1 year period, they are probably getting about 12% return, which is better than treasury bills at 6%. So whilst for a retiree, I won't recommend putting all your money there. I would say that depending on how young you are, when I say how young, I mean retirement, if you just retired at 60, by God's grace, you still have time, all things being equal. Like it's not like a 90-year-old, if you get what I mean. Depending on how young you are, then you can actually put a small portion, yes, but a portion that would also give you like a 12% return, which can actually fund something, right? So, but the reality is that these are conversations that can only be had when you sit down with someone to tell you, okay, this is your investment strategy based on where you are. And then the amount of capital you have. So if you're a retiree and you have 100 million, it's different from a retiree that has just 20 million. Or a retiree that doesn't have any pension contribution, So there are different factors. If you have pension contribution and you have 100 million, then, your pension contribution might be for your basics. If you have 100 million, maybe you already have a house. So you are just saying, okay, let me go for vacation, visit my grandchildren. That's a different life from someone who, yes, has pension, but is still living in a rented property, So there are things that can be done, but it's almost like you have to first of all look at your own current reality and then decide, and then someone would advise you, this is your own investment strategy that would work and would like tell you why it will work. And do you get it? Because the truth about that, you have to go low risk, except if you have like $1 billion. I mean, if you had $1 billion, you probably don't need to be on this call. Do you understand? So, well, if you don't, I mean, then there are things that can be done.
All right, thank you very much.
I also saw that someone mentioned that if currency devaluation and inflation, really, if in Nigeria, I think Ola was clear about it earlier. I don't know if it was just confusing how, even the foreign countries that you're looking up to are also suffering from inflation, right? So holding dollar doesn't mean that you're not suffering something. It may just be low, maybe lower than what you would have if you were in a higher position, for example. So it really depends. It depends. Dollar may solve your problem one way, but maybe not two ways, because if you have to then, at least, even in dollar terms, things are expensive, but maybe not as, high as it is in naira terms. So 17% inflation compared to 8-9 level is not obviously not the same. So there's still a great margin in there. But the point is that either way, you will still suffer something, however, little it is. So it's not a complete solution. Just to put it in summary, that saying that moves to the US is not a complete solution to any challenge, but at least probably minimizes your potential loss of value over long term.
All right, thank you very much, Adeniyi. For Kehinde, please type your question in the Q&A chat box. That's Kehinde, who just dropped his question. Ayepe. Our wealth advisors will type an answer for you. Bola Risikat has been raising his hand, I believe. Okay, you have the floor. Please ask your question. Bola, you are unmuted.
All right, thank you so much. Good afternoon, everyone. Good afternoon. This question is actually for Hola. Good afternoon to all our speakers, and thank you, Mary Stem, for this webinar. It's been quite educative, informative, and insightful. Okay, so the question is actually for Hola. You were speaking about hedging our investment against the valuation, basically. Like you rightly said, that if you need to beat inflation, I mean, it has to have a lot of risk, which is you're talking about the higher the risk, the higher the return. But the question is, most of these fund sponsors, most of these clients, even one of the attendees wrote it in the chat box that most clients, what they always ask from us, it's that they want their return to beat inflation. Of course, we know that the inflation of Nigeria today, which is above 17% and all that, the returns is not way up there. How do we approach them? How do we convince them? Because even when you were speaking, you're just talking about us maybe telling them that you can actually hedge the devaluation, but you were really not talking to the inflation, So I don't know if you can just speak to that.
Okay. The way to actually beat inflation is to invest in inflation hedging products. When I say hedging products, for example, real estate prices have been shown to align with inflation, if you get what I mean. And then in Nigeria, for example, let's localize it. One of the major drivers of inflation is oil prices. So oil prices, if oil is going up, then if oil is going up and then it translates into fuel price locally, meaning that they move fuel price, everything will go up along with it. If exchange rate is going up, so if exchange rate devalues, right, then it will feed into everything because we are import dependent. In creating an investment strategy for people, you are going to pick investments that would respond to devaluation, investments that would hedge, like for example, I've said real estate. So you are creating a portfolio for someone, you put some of the money in real estate, you put some of the money in dollar-denominated assets, you put some of the money in equities, right? For example, as much as we're all complaining, there are some companies like palm oil products, because commodity prices have increased globally, palm oil stocks have done quite well because they are benefiting from the increase in commodity prices. So if you are looking at hedging inflation, then what you need to do is to be investing in things that would align, they correct their pricing as prices go up. Now, the thing about it is this: as much as the person, depending on the risk tolerance of the person. When I say risk tolerance, I mean the person's capacity, financial capacity to absorb risk. You have to be able to educate the person that, see, if I'm putting all your money in these things, it means that if you come to me for school fees and this stock has not moved, if the stock bid is 100 and the stock offer is 120 and I'm buying for you, I'll buy at 120. If you come to me tomorrow and the stock has not yet moved and I need to sell, I will sell at 100. Not because the stock is bad, but because the stock has not yet moved. So be sure that when you are buying this stock, right, you have time. Now, if the person says, I have time, there's nothing you can do. You will do what the person says, right? But what happens is that if the person is connecting, like communicating, the day they come to you that, I need money for school fees, you tell them, see that 100, we are going to sell there. By the time you say that once, next time when you are talking, the person will also be more open, because what can now happen, and that's the nature of life, after the person sells at 100, 2 weeks later, the stock would have moved to 130, 150, 130 bid, 150 bid. That's the nature of life. So you will now tell the person that, see what I was telling you, that you wanted to put everything here. This money for school fees was supposed to go to fixed income. Collect your 6% treasury bill in peace, or collect your 3% on, or do fixed deposits. Do you get in peace? I know that this money is there, rather for you to take a 20 naira loss. Remember, it's a journey, and that's the thing you have to cultivate with your clients. The reality is that not everybody will get it. The reality is that some people would be angry and they will not learn. So you have to keep educating, and you can't get every client, or you cannot make everybody happy all the time. Do you understand what I mean? But you have to do what you need to do, and you have to try to communicate. But it's something that I realize that a lot of people don't get. And I realize also that asset managers get pulled into trying to please them. So in the end, you don't win in any way, if you get what I mean. So you almost have to build a brand so that in the end, people would end up saying, you know what, go to these people. After you finish running around, they know what they are doing. Just listen to them. And that's how over time, when people have made losses, they will still come to you. Oh yeah, take the money, help me, let's do this thing. Let's calm down. That's literally it. It's human nature. Everybody's looking for money. Like, it's normal.
All right, thank you very much, Mrs. Oladile. Our time is fast spent and we'll be rounding up very soon. However, ensure as an attendee that you have completed the Google form, whose link is in the chat box. Please complete the form so that we can reach out to you to answer more questions. Temitope and Akin, please ask your questions in the Q&A chat box. Would not be able to unmute you to ask your questions verbally because we are running out of time. All right, the final question for Mrs. Oladile. Talking about debt, which is also called leveraging on other people's money. Please, can you expatiate on how this can be a tool for financial independence for some investors? Because we know it can be for everyone. Some would think deeper, while some would simply use it to elevate themselves. Please throw more light.
An easy example that everybody can relate with is mortgage. That is literally it. So if you buy a property, let's move back into like past. Like, let's say in Lekki, you could buy a property for 50 million a couple of years ago, and you only had 20. You put down your 20 and you're paying interest, and you've paid interest for maybe 5 years, whatever. Let's say it was a 5-year mortgage, right? You know, we don't do long-term mortgage here. And then now properties in Lekki are 100 million. You know that even if you've not finished paying off your loan, right? If you sell the property, you pay back the balance to the bank and you still have profits. So let's say you did a down payment of 20 million. So what you owe the bank is 30. And so you've been paying 30 over 5 years, and maybe what the balance is now is 10. If you sell the property for 100 million, right? You will just pay the bank, 10 million, and you have 90. But how much did you start with at the start? 20 million. If it was only 20 million that you had, could you have bought the property? No. But you borrowed, you leveraged up, the value of the property grew, and then you sold off and you made profits. That is what leverage is. Now, what are the risks? Because there's no reward without risk. The risk is that you could have bought a property in Lekki, and then there's some construction that goes on that street, and the road starts flooding. Nobody wants to live there. You can't even let it out, right? And even though other properties in the area are doing well at 100 million, you find that those properties are serviced, they have 24 hours power, there's no infrastructure for your own house because your house is old, you know, things like that. And so instead of you to sell at 100, you are begging people to take your 50 to get out. Do you understand? Or maybe even 40. Those are the risks. Now, imagine if you borrowed 30 million, you put in 20 million, but people are offering you 20 million for the property and you are owing 30 million. That is the risk of leverage because you will have to pay. If the value of the asset cannot cover your obligation to the borrower or the lender, then you have to pay out of pocket, and that's the risk of leverage. So think of anything that you can do. Just copy and paste that format of a mortgage is the same logic. just take out property and put stocks, just take out property and put the business, whatever it is. The truth about it, you can make extraordinary profit from leverage, but you need to understand, you need to be sure that this thing that you are putting your money into is viable. Real estate is always the easiest low-hanging fruit to enter in, because worst case scenario is that you live in the house. So it has that emotional value or safety value attached to it. My first house, you live in it, you will manage, whatever is looking like, you will manage. I'm not paying anybody rent. It's understandable. But by the time you start going to other things like stocks, by the time you start going to other assets, random assets, right? You have to pay back. There's no emotional value. You have to sell, you have to gather money together to pay back. So that's how leverage works. And I hope that you can just think, anytime you think of any leverage offer, just think of how a mortgage works. And the things that can go wrong and the things that can go right is the same thing.
Very insightful. Thank you very much, Mrs. Oladele. At this point, we would quickly recap. Then we say a big thank you to our fantastic panelists who have taken us through what it actually means to have financial independence. So to round off, we'll be asking our panelists for just one sentence to recap everything we have learned today. So if you're going to drop one line or one sentence for all our attendees, what will that be? We'll start with Mr. Collins. What's your final advice in one sentence?
Okay, thank you so much again. I would say to our guests, friends, and partners on the call, I think personally, I believe that one key thing that is big for me is that made in Africa goods and services, or product or services that we offer, can only drive our prosperity if we as individuals, as participants today, demonstrate that African product and services globally. Thank you so much. And I'm so glad to be part of this. Thank ministry. Thanks.
Thank you very much, Mr. Collins. Okay, we'll go next to Mrs. Oladele. What final advice do you have for our attendees today?
Okay, like I always say on my channel, you can't outsource your health and your finances. You have to engage. Just as nobody can go to the gym for you or take fruits on your behalf, it's the same way no one can sort out your finances for you, right? You have to engage. You have to get involved. Your mind needs to be there. Thank you.
Thank you very much. To you, Adeniyi, what's the final word for our attendees today?
For me, financial independence is a journey. It will take some time, and it's very important that you speak, you to a professional to provide guidance over time. And at Meristem, we are always available for that guidance that you need on that journey. Thank you very much, Naya.
Thank you very much, everyone. Thank you very much, our great panelists. And to read some of the comments from the chat box, they say, thank you, Meristem. Thank you, attendees. Someone says, really great panelists. That's from Mrs. Janila. They are saying, thank you very much for this insightful session. At this point, I'll call on Sahid Bashir, the Managing Director of Meristem Stockbrokers Limited, to give the round of address.
Thank you, Ifunaya.
Thank you, Sahid.
Yeah, thank you so much, our distinguished panelists, from Mr. Omokuro to Ola to Adeni. Wonderful delivery. We thank you so much for coming. It's a lot has been said as regards the topic of the day, and that is where Meristem comes in, and that is what we do. This is the promise we have made to you as our customers, as our clients. We're always there for you, and you have come this far. We always want to take you further, and that's what we promise all our customers. And of course, we are in business because of you. A lot has been said. I don't know whether I can summarize all has been said by distinguished panelists, in the last 1.5 hours, talking about it's a journey. Of course, And of course, you need a partner to ride with you on this journey. And Meristem is always here for you. You need to seek financial advice and knowledge do your financial due diligence before you jump into that next investment option available to you. And of course, you need to deal with regulated entities for your investment options. Don't just look at the investment and look at the return. And of course, as Ola said, it's about balancing risk and returns. There's no reward for you without risk. We should always know that, and investors should put it at the back of their mind.
Sorry, Sahid, your video can be turned on now so that we can see you and engage better. Apologies.
Yeah, thank you. So it's about balancing the reward and the risk. There's no reward without risk. Every investor must understand this. And of course, Ola mentioned that portfolio allocation and investment strategy is critical for you. And you need to work with a consultant, with experts who are knowledgeable about your risk, your investment profile, and risk and reward options for you to be able to navigate that journey. And of course, Collins made us understand the fact that right choice of investment and expert guidance is critical to your investment journey, your financial independence. You could see that the three of them, panelists, they speak in unison. They talked about, in terms of their advice, their perspective, they have points of intersections. And that is talking about working together with advisors and making the right choice. There are a lot of options out there for you. And success depends on the actions you take to achieve the success. And of course, Meristem as a partner is always there for you. Is a promise we have made to you. We would continue to provide that information to you so that you can make the right choice. We thank you sincerely for making time to be with us today for our breakfast session on financial independence. We would always continue to provide the information required to make informed investment decision. And as we say in Meristem, you've come this far. We would like to take you further. Thank you so much. We are looking forward to hosting you in our next episode of our webinar next month. Thank you once again for your attention and for making it here today.
Thank you very much, Sahid. And thank you everyone for attending the Meristem Financial Independence webinar. We hope to see you next week, actually next month, at our H2 2022 Outlook webinar. For today, have a wonderful rest of the day and put everything you have learned to practice. Goodbye.
You've reached the stars. Now let's see you conquer galaxies.
The beauty of wealth lies in growing, preserving, and transferring it. Building wealth isn't only what you do for yourself, it's what you do for generations to come. And to pull that off, you need partners. Partners who understand that the assignment isn't just to grow your wealth, but to preserve it against the harsh storms of life and ensure it sees the light of day, ready to be transferred from generation to generation. So you see, the art of building wealth is all about growth, preservation, and transfer. And at Meristem, we have perfected that art.
Meristem, let's grow wealth for you.
When it comes to making great investment decisions, everyone needs a buddy. Now you have one. Introducing Wealthbody, the go-to app where you can save, invest, and pay your bills. Now you have a buddy to help you reach your money goals, uncover attractive investment opportunities, and make payments with the press of a button. Here's how it works. Saving on the Wealthbody app is super easy. First, ensure you are logged into the app on your mobile device. Then head over to your savings dashboard. Click on the plus sign to see a list of savings options to choose from. Add your goal details and start date. You can also add a photo to personalize your goal. Choose to fund your savings plan from your debit card, and then you're all set. There are several options to choose from when you invest with the Wealthbody app. Head over to the investment dashboard, click on the Add Investment button. Select on the Create Investment option. Choose an investment option from the list. Read all the information, then click Invest at the bottom. Fill in the required information. You can also add a photo to personalize your investment. Choose to fund your savings from your debit card or your wallet, and then you're all set. You can also pay your bills conveniently directly from the Wealthbody app. Go to the wallet dashboard and select one of the bills payment options. Pick a bill you want to pay from the drop-down. Fill the relevant details and choose to pay with either your debit card or your wallet. And just like that, you're all set. Start your journey with your new body. Download the Wealthbody app on all iOS and Android devices today.
You've reached the stars. Now let's see you conquer a galaxy.
The beauty of wealth lies in growing, preserving, and transferring it. Building wealth isn't only what you do for yourself, it's what you do for generations to come. And to pull that off, you need partners. Partners who understand that the assignment isn't just to grow your wealth, but to preserve it against the harsh storms of life and ensure it sees the light of day, ready to be transferred from generation to generation. So you see, the art of building wealth is all about growth, preservation, and transfer. And at Meristem, we have perfected that art.
Meristem. Let's grow wealth for you.